Good morning, good morning, good morning. It's Monday. It's September. How is it September already? One sec. Let me just wait for Mr. Brown to show. Oh, I apologise for the seagulls. There's Mr. Brown. Invite as co-host. Seems to be a bit of a seagull murder going on outside at the moment. He's there. Is he accepted? He's accepted.
Morning, Ryan. Good morning, all.
Good morning. Do you want to say good morning to the seagulls? They seem very close this morning.
Oh, are they again?
Well, yeah.
It's almost like you live by the sea, isn't it?
It almost is, mate. It almost is. Right, 1 second. Let me get the legals out the way. I'm still not going to rely on the fact to remember these because, let's be honest, I can barely read them. So this 1 sec. Oh, I should have had this up already. I don't know why I didn't. 1 sec.
Sounds
Right.
like you're typing them out as you go here.
Well, yeah, I do need a new keyboard. It's getting increasingly loud. You're not the first to say that. Young Sarav has been complaining when I'm having my calls with him. But anyway, nothing discussed on these spaces session constitutes trading or investment advice or infers any kind of endorsement by PiQ Global Limited, traded as PiQ or PiQSuite, or its affiliates, including the hosts, which is obviously Mr. Brown and myself, Mr. Paisley. So how are you? Good weekend?
Yeah, not too bad, mate. Very chilled weekend, but as you just said, in September now, Labor Day today in the United States, and after that, we're kind of back from the summer and markets get up and running properly once more. So, I
Fun
think it's going to
fact
be
is
an interesting month ahead.
only 107 sleeps until Christmas. There you
For
go.
God's sake. When does your job as an elf start?
Wow. Okay, if you've chosen violence this week, that's noted.
What do you mean this
You're
week?
very, very brave, my friend. Very brave. Go on. What's happened
Should we
over the
crack on?
weekend?
Right, good morning, all. Well, we'll go back to Friday first of all, and then we'll get
Oh
into the
yeah.
weekend. Yes, things did happen on Friday, and it was actually a relatively solid day for risk assets. Equities rallying quite strongly. The S&P up by around 1%. The Nasdaq up around 1.3%. Of course, the S&P is within inches of a fresh record high, although, of course, US markets closed today for Labor Day, as we just alluded to. Elsewhere on Friday, we saw some modest selling continuing across the Treasury curve, which itself continued to steepen, with the 2s, 10s closing Friday at minus 1.7 basis points, which is the steepest since the 5th of August. That comes as the 10-year rose by 4 basis points for the 5th straight daily sell-off, with 10-year yields touching 3.9%, which is a 2-week high. In turn, the dollar continued to firm, with the dollar index rallying to a high of 101.80. The dollar was firmer against all major peers, with the yen the biggest loser, down around 0.8% on Friday and trading north of the 146 figure, which dollar yen remains above in early trade this morning. We did also see some softness creeping into gold, which has this morning broken below 2,000. Yes, which has this morning broken below $2,500 an ounce and is trading to a 10-day low. That is, of course, spot gold, just to clarify. And Friday also saw some fairly chunky selling in crude, with WTI notching its biggest daily fall in a month, down about 3% and testing $73 a barrel to the downside. In terms of catalysts on Friday, there was plenty of data, although I would question the impact of most of it. Perhaps at the margin, the cooler than expected core PCE figures delivering a little bit of a fillip for risk assets. We had the core PCE deflator coming in at 0.2% on a month-on-month basis in July, unchanged from the prior print. And on an annual basis, core PCE came in at 2.6%. That's just a touch below the 2.7% markets have been expecting, and also unchanged from the pace seen in June. We also had a slight downside surprise on Eurozone inflation, which came in at 2.2% on an annual basis in August at the headline level. That is the slowest annual increase since July of 2021, and should see the ECB really cement that case for a further 25 basis point rate cut at the September ECB meeting, which is coming up next Thursday. And the good news on inflation didn't stop there, because the University of Michigan's Consumer Sentiment Survey, the 1-year inflation expectations component of that survey, fell to 2.8% from a prior 2.9%, and that is the lowest level since 2020. So I think all of that really just helping to give risk assets a little bit of a boost into the weekend. In terms of other bits and bobs from last week, we had a modest upside surprise on Canadian GDP. The economy growing by 2.1% on an annualized quarter-on-quarter basis in the 3 months to June. That's up from a prior 1.7% in the first quarter of this year, though it doesn't look like it will deter the BOC from delivering a third consecutive rate cut at their next meeting, which is on Wednesday afternoon. In terms of news and data flow, on Friday it was relatively light. The only notable headline, and this is naturally what pressured crude, as I mentioned, was a whole host of Reuters reports citing 6 sources within OPEC Plus that the cartel are likely to proceed with their planned production increases from October onwards. Of course, higher supply, while the demand outlook remains a little bit anemic. That is naturally going to put downward pressure on crude
Supply and
prices.
demand, baby. Supply and
Over
demand.
Indeed, Economics 101. Over the weekend, we have had a couple of notable headlines, a couple of things from China that are worth
Oh,
bearing in mind. The
thank you,
first
the eyes.
is the Oh God. The first is the official manufacturing PMI. That came in at 49.1 in August, down from the prior 49.4. That is the 4th straight decline in the official manufacturing PMI gauge, and also represents a 6-month low. Usual caveats with Chinese data
It's
apply, in
bollocks.
that it is entirely made up, exactly, but also worth remembering that if that is that rather
Yeah,
grim
right.
data is what the nation are happy to release, how bad is it in
To like
reality?
to kind of put that
The
in kind of like our lingo, and possibly our listeners' lingo, it's basically like when your missus says, "How drunk are you?" and you say, "I've only had a couple of beers." So you're admitting that you've had a few beers, but we also know you're absolutely lagging.
Yes, exactly
Go on,
that.
Jens.
Also from China over the weekend, Bloomberg were running some reports that China have apparently warned Japan of potential retaliation over some new curbs that Japan are trying to put on the chip making sector. This obviously following on. Well, slightly following on, I should say, from the reports we had last week over the Dutch government looking to put in place some restrictions on how ASML operate in China. It appears that the Chinese are none too happy about that, which is not particularly surprising. And last but by no means least, there were some regional elections taking place in Germany over the weekend. To say it was a grim weekend for the ruling coalition parties, Olaf Scholz's SPD and the Green Party, is perhaps an understatement. In Saxony, the CDU, which of course was the party of Angela Merkel, they won the regional election with 31.5% of the vote. The AfD, the Alternative for Deutschland, the far right party, they came second on 30%. Meanwhile, in now I'm going to butcher the
I'm glad. Do you know
pronunciation
what?
of this. The
I was just thinking to myself, because obviously it's US holiday. The lads in News Corp haven't actually done a morning report, so we've got nothing from them. So I'm actually quite glad you're doing all this kind of geopolitical stuff, and especially this
well,
word you're about to try and pronounce, because I was going to just skirt right over the top of it. So go on.
I'm
Good
sure
luck.
you
Good
were, but
luck with
we're
this
going to
one.
go for
Hang
it
on.
anyway,
Let
because
me get
in
comfy. Go on.
in Thuringia, God knows where that is, the AfD actually won the regional election with 30.5% of the vote, which is the first time the party has won a state election within Germany. The CDU coming second there, the SPD third, and the Greens fourth. Sorry, in Thuringia, the SPD actually came fourth. In Saxony, they came third. So a pretty grim result there. Obviously, in keeping with the broader political trend, really, across Europe, which has been this kind of move towards right leaning, or, well, leaning so far, they're falling over parties. Obviously, we had the National Rally in France. They still don't have a prime minister. The Netherlands had a big surge in support for far right parties, and we're seeing this in Germany Germany as well. I believe, although I'm not certain, that there is a nationwide election in Germany towards the back end of next year.
Yes.
October seems like it rings a bell,
Yeah,
but I may have got
October
that
is what
wrong.
I've got on my
So, of
notes.
course, yeah, that's going to be a theme that perhaps comes into a little bit more importance for the Eurozone as
Yeah.
we move into next year. But that is pretty much it. And it's been a relatively quiet morning. Labour Day in the US news flow is somewhat lacking this morning. But that's pretty much it
Indeed.
from
Well,
me.
like I said, well, thank you for that. Like I said, there's no report from News Corp this morning because of the holiday, so I'm kind of winging it from some articles from PiQSuite. But firstly, just for Truman, because he did ask, Greg's, I think without Truman, Greg's would be down a lot more than they are. They're only down 1%. So Truman, get out and buy some more whatever they sell in Greg's. I've never been in a Greg's, so I'll leave that one to you. But just some headlines.
You've never, sorry, hang
Go on,
on. You've never been in a
mate.
Greggs?
Considering I've never eaten a banana and I'm also scared of tomato ketchup. Are you surprised by anything anymore?
Well, I
I've
shouldn't
never
be,
stepped foot
but
in a
you're
Greggs.
missing
Oh,
out,
well,
mate.
am I? Am I really? I'll take your word for it. I can feel people typing as we speak, as we say this. Anyway, so just some winging it with some headlines. Well, some not headlines, just some news as well. Just further on what Mr. Brown was saying about what's happening in Germany. Obviously, where the AFD have won, well, I say win or won, they scored the most points, basically. They got the most votes, but they are unable to form a majority. The problem with this now is that even though they got, as I said, the most votes, all the other parties have come together and formed an agreement that none of them will form a coalition with the AFD, which this is not going to end well because it means that there's a lot of people that voted for the AFD, and it's seeming increasingly likely that the AFD won't be able to form any part of the regional government. Um,
Well, this is a little bit like the French
well, this is
situation, isn't
it.
it? Sorry to
This is
interrupt.
it. No, mate, you don't have to apologise. I interrupt all the time. It's what we do. It's what I do. So look, I'm not having a political bias here. I'm just kind of trying to be apolitical and state the facts. And the facts are that the people that voted for the AfD are very, very political minded in what they've done, and they've done it for political reasons. And basically, a lot of this is down to immigration and stuff like that. Now, if the other parties are basically going to ignore their vote, and it looks like that's where we're going, there's going to be no real change. There's going to be no political implementation of what the AfD was standing for. There's going to be no reforms, and the voters will very, very easily come to the opinion that the political process has been hijacked by the elites, as one analyst has put it. This is going to cause some quite considerable civil. I'll go as far, to be honest. I'll go as far as saying civil unrest, because I would be shocked if we don't see some quite major protests in those regions. So that's definitely one to watch. And obviously, as we know, it's the last thing Germany need at the moment is stuff like this, because they are pretty fucked at the best of times. Just looking further afield, though, getting away from politics for once. One thing to note for obviously Intel, the stocks obviously trades in the US, which is closed today, but it was announced overnight that the CEO is to pitch to the board basically a fire sale of assets to cut costs. So that's something to watch. If we do manage to get an early price somewhere on Intel, I'm not sure where else. Some of these big names do trade on smaller exchanges in Europe, so one to keep an eye out if you have got access, sorry, to prices on that. But that's one for you. Policy makers. I don't know if you've seen this morning, Michael, but it looks like.
Oh, yeah, I want to have
All
a
right, I'll
rant about
stop. I'll
this.
stop. I'll stop. Thank you on that. Thanks for letting me know.
No, 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 no,
No,
no.
no, no.
Go on,
So
go
just,
on.
I'll just
Do,
get.
do,
All
do
right. So
bring it
just a
up.
bit of fluffing work and warm them up for you. Get them slightly aroused on what you're about to say. Basically, obviously, we know September is pretty much a done deal, but it looks like there's some disharmony in the camps regarding October. But Michael will tell you more on that. And PIQ's interesting fact for the day, or my interesting fact for the day, is that oh, ow, fuck, I've lost it. No, no, got it. Only 8% of Chinese are considered obese, higher than neighboring Japan and South Korea, who are far lower, between like 6 and 7. But in the United States, it's 42% of people are obese. And why I've
Fucking
said
hell.
that is because there's an article out this morning saying that as the Western influences are getting their grubby paws into China, the obesity rate is starting to tick up. But 42% obesity. Absolute fat fucks. Right,
Absolutely.
go on, over to
Um,
you.
Right. Well, no, I will move on to the day and the week ahead in a second, but I did just want to touch on this
You want to touch
ECB
what?
thing because it has been getting a bit of attention on news wires this morning. I think probably because it's so quiet,
Yeah,
people
that's
haven't got
exactly why.
anything else to bother with. But the crux of the article is, I've read it a couple of times, and the Reuters article and also the sort of Bloomberg summary of it. The crux of the article is the ECB's doves are worried about a recession and think they should cut rates more. The ECB's hawks are worried about inflation coming back and don't think they should cut as much. I mean, that's literally just the definition of what a dove and what a
Yeah.
hawk is. This article doesn't tell us
Well,
anything new. I think what's happened is someone at Reuters has sat down and gone, "Oh, I've got fuck all to
hey
write
mate,
this
I
morning.
won't
Let's
have a bad word said against
write
Reuters.
this," and
I've to be honest, I've
we'll add the word sources in to add a bit of
well,
credibility
look,
to what I'm
if
writing.
anyone from Reuters is listening, I do not agree with Michael's assessment on this. And yes, and we did get your invoice over the weekend, and we will be paying that for this month's distribution license as soon as possible. Just Michael, what have I said? Right, we need an editorial code. Do not slag off fucking Reuters, right? Fuck's sake.
Well, get them to write proper bloody articles, and I won't need to slag them
I say
off, will
one
I?
thing I
There you
did
go.
find interesting is well, again, sources. Was basically they were like the kind of the angle that I was getting from it was that yes, we know Germany are in the shit and in recession, or going to hit a recession, quite a major one, but we don't think monetary policy is going to solve their problems. It's like this is a multi-year issue for Germany, so we're not going to be cutting on the basis of Germany in the shit. Which, if that is legit, and we start hearing more of that, that's quite an interesting turn because there's been a lot of people, including me, that are thinking that one of the reasons that they will cut is to bail Germany out. So that's one thing I picked
Yeah,
up on that.
let's see how that holds up when the shit hits the fan, shall we?
Okay. Right. What else is happening today? Not a lot.
Well, I was going to say actually just one other thing in terms of while I'm ranting away, and I will get on to the week ahead in
Oh,
a
we've not
second.
started that yet.
No, there was a Labour minister on the television over
Mm.
the weekend talking
Oh, this.
about
Oh, nearly said
this
something.
black hole once again. Someone called Lucy Powell. Absolutely no idea who she is, apart from an absolute idiot.
You're being
She was
polite
saying
there.
that if
You're being
Labour,
very polite there.
yeah, if Labour didn't take this decision to cut winter fuel allowances, which I think saves about £1.5 billion, which in fiscal terms is
Peanuts,
nothing.
mate.
Let's be
Peanuts.
honest.
Genuinely back
She
of the
was
sofa
saying that,
stuff.
yeah, she was on Sky News saying that if they didn't do it, there could have been a run on the pound and the economy could have crashed. And it's just absolute nonsense, bordering on incompetence and bordering on dangerous at this point. And of course, we still have 2 months until the budget, so plenty of this crap
Well, not
still
only
to
that, but
come.
like way above inflation pay rises whenever like the unions ask for it. All this stuff. You're telling
Yes,
me that we can't find 1.5 billion to basically make sure old people don't freeze to death. Come on, give me a fucking break. But the worst thing is, right? So I'm glad you've mentioned it. Sorry, guys, we're going off a bit of a tangent here, but it's quite important. Right? There's two reasons she said what she said. Right? One of them is she is fucking thick as pig shit, right? The other one is she thinks we are all thick as fucking pig shit. Now, choose your team. It's one of those two because that is the only reason you would say something as stupid as that. Oh, right, you better get on to the week ahead, mate, because I'm
yeah, I think we better,
I'm
but I
heating
mean that
up.
is just
Bollocks.
absolutely ridiculous. And I think actually I haven't watched it because obviously we're doing this, but it looks like another Labour
Oh
minister, the
God.
Education Secretary, someone called Bridget Phillipson, has just been asked about that on BBC Breakfast, and I think she
Oh,
agreed with
go
the
on.
Muppet who was on
Oh
TV
God.
over the weekend. So it's like the
But
blind leading
I
the
have
blind.
so just like
Anyway,
just lastly on this, I have asked Betfair to make me a market or just put to start a market on the exchange for Keir Starmer not seeing out the full term. So it'd be interesting to see that.
uh,
I price it mentally in my head. I've got choice at about 1.8. No, he does not see the full term. So that's slightly odds on for those that aren't aware of digital odds or decimal odds. Sorry. There you go.
blimey.
Anyway, go on. What's going on?
We shall see. Cool. All right. Yes, in terms of the week ahead, obviously, we'd expect a very quiet day today. The US and Canada closed for Labor Day, thinner than
Bit
usual
of
trading
whiskey.
volumes and liquidity. Exactly. As a result, a lot of markets are closed. The markets that aren't closed, you would expect not a lot to be going on, and that particularly holds after the London close, which is around about 4, 4:30. After that, you would expect things to die out pretty rapidly. Having said that, we do have quite a busy week ahead. Just to go through the highlights day by day. Tomorrow, we have the latest ISM manufacturing PMI figures due from the United
Woo.
States. The index expected to rise to 47.5 in August from a prior 46.8. Although, of course, the employment subcomponent of that index will also ahead the US labour market report that we have due on Friday. Moving into Wednesday, we have GDP figures due from Australia. We've got services PMI figures due from pretty much everywhere apart from the United States, where the data is a day delayed due to today's holiday. Also on Wednesday, we have a policy decision from Canada. As I alluded to earlier, the Bank of Canada set for a third straight 25 basis point cut. That would take rates to 4.25% in Canada. The OIS curve there pricing a total of 77 basis points worth of cuts by the end of this year. The market therefore implying that they believe the BOC will cut at each of the remaining 3 meetings in 2024. Also on Wednesday, we have the latest job openings data from the United States. This data referencing July, expected at 8.1 million, just a touch softer than the 8.184 million that we saw in June. And we also have the release of the Fed's beige book of anecdotal economic evidence on
You try
Wednesday
saying
as
that after a
well.
few pints.
Oh yeah, well, try saying it's sober.
Good point.
Moving into the tail end of the week on Thursday, we have the latest earnings figures from Japan. Of course, this comes ahead of the next BOJ decision on the 20th of September. Earnings expected to rise 3% on an annual basis in July, slower than the prior 4.5%. Although I believe, and I'm not an absolute
Taking on
expert
the
on
future.
this, that we have moved past at this point most of the kind of annual union wage negotiation rounds in Japan. So no surprise to see that metric fall a little bit. Also on Thursday, we have the latest ADP employment figures from the United States, which if you're using to try and predict the payrolls print on Friday, go and give your head a wobble. We also have the weekly jobless claims figures from Thursday, though neither the initial or the continuing claims print will pertain to the August non-farm payroll survey week. The most impactful release on Thursday comes in the afternoon in the form of the ISM services PMI. That metric expected to remain pretty much unchanged in August at 51.5. And just on corporate earnings, although earnings season has pretty much wrapped up with Nvidia obviously reporting last week, we do get earnings after the market close on Thursday from Broadcom, who are another big name and player in the chip making space. And then last but by no means least, the week wraps up on Friday with the main event of the week, which is the August US employment report. At the moment, headline non-farm payrolls expected to have risen by 165,000 compared to the 114,000 that we saw in July. Unemployment seen ticking lower to 4.2 from 4.3% previously, while average hourly earnings are seen rising by 0.3% on a monthly basis from a prior 0.2. Of course, recall that the July payrolls report, which was substantially softer than expected, did kick off that latest round of overexcitement over not only a potential 50 basis point cut in September, but also all these Muppets coming out and saying the Fed should deliver
Oh
an
God, yeah.
emergency intra-meeting rate cut. So do just bear in mind that there is likely to be a heightened degree of sensitivity around the numbers that we get on Friday. And of course, the other thing to remember is that the July payrolls figures were heavily skewed to the downside by the fact that Hurricane Beryl made landfall during the non-farm payrolls survey week. Obviously, that saw a significant rise in temporary layoffs, the biggest month-on-month rise since December of 2020. And now that the hurricane has gone, you would expect most of those temporary layoffs to be reversed, which should
Just
the payrolls figure.
sorry,
Sorry,
go
just
on,
one
go on,
last
go
thing
on.
on that.
Sorry.
Some sell side estimates point to somewhere between 30 and 40,000 of upside job gains as a result of just that temporary unemployment unwinding. So do just keep that context in mind when we get the data on Friday.
Something else to bear in mind, obviously, with of revision gate and all that bollocks with the NFP,
Oh, God.
BLS. You're going to get the usual people getting all frothy knickers over the fact whatever the release is going to be, and claim it's all bullshit and stuff. I don't know about you. My view on it all. Well, we know my view on the whole phoning up for getting the real results. I think it's just a good thing to do. I don't think there's anything untoward about that. But in terms of
No, not
in
at all.
terms of the NFP itself and the BLS, all these people that are saying it's made up data and stuff like that, it's not, right. To think that there's some massive conspiracy about who generates numbers and stuff, things just don't work like that. It's just the simple fact that it's fucking hard to get all this data in one place at one time, especially by a government agency. That you can't slag off how
Yeah.
incompetent governments are, like government agencies are, and then expect them to get all these millions of data points all lined up in a row perfectly 2 weeks after the month has ended, or but
No,
after the period has ended. It doesn't work like that.
no, I completely
Choose your
agree with you.
side, right? If you think that it, like, bureaucracy, and you think the government agencies are shit, which they're not exactly the most efficient things in the world, then accept that the reason there are revisions is because the data comes in wrong, the data comes in messy, some data doesn't come in at all. They're relying on a million different fucking data points to come in to create this. So genuinely, anyone that can't, for me personally, it's a bit of a litmus test. Anyone that starts talking about fake data and stuff, I don't care who they are. I kind of like mentally mark their card as like someone that doesn't really understand how things work. Like there's I won't name names because it's not my bag anymore. I'm trying to mature, but there's a very prominent person on FinTwit that swears that like the Fed and all this have like secret kind of oil buying desks and stuff like that. I can
No,
promise you right now
ridiculous.
that that does not happen. They either believe it themselves, in which case they're misguided, or people like that are misguided, or they're saying it for clicks, and it's just, and it's absolute bollocks. But anyway, just also was
Sorry,
go
I
on,
was
yeah, go on.
Well, I was just going to say on that one is I think both you and I are sort of usually the last people queuing up to give praise to government
Oh
agencies and
yeah,
central banks and all the rest of it. But it is in a country of 300 odd million people and a labour force of 160, 170 odd million to get
any data,
any sort of
yeah,
data
right.
on what is going on with that labour market 3 weeks after the end of a week after the end of the month and 3 weeks after the survey is
This
actually
is it.
conducted is pretty
Yeah,
damn good, particularly when you look at the ONS here in the UK.
yeah.
They've got a labour market that is about 20% of the size, and it takes them 2 months, and they
But
still get
like,
it
and like
wrong.
you said, right,
Um,
it
the
relies on survey that you're relying, like the government agencies like the BLS, they're relying on employers to fill out surveys and stuff, right? It's not like
Yeah.
they're sending a guy round to every fucking place and like, oh, marking down and ticking people off. It's like, if people actually took a second to realize the logistics involved in getting these numbers in one place at one time, it's unfathomable.
Mhm.
So cut 'em, again, like you said, I hate the fact I'm saying this, but cut 'em some slack.
Yeah, the other thing I would say on that is, particularly on this, secret trading desks doing nefarious bits and bobs, is, you look at these organisations, and we were just talking about the incompetence of the government here in the UK and all that sort of thing. I mean, do you seriously think that these agencies would be able
Keep a
to
secret.
keep this sort of thing
Yeah, right.
quiet? And even if they could keep it quiet, do you think they'd actually be able to make it
No,
work? Absolutely
no,
not.
exactly that. Exactly that. Well, I'm glad we're on the same page. Just quick.
Anyway, that's pretty much
Well,
it for the week ahead, and we've gone
yeah.
on for a while
Just
this morning, so I will stop
just
talking now.
quickly though, whilst we have been talking, just some data that's come out. Both Germany and French manufacturing PMIs have come out. Both a tiny bit better than expected, but the expected was 42 for Germany, 42.1 for Germany, 42.1 for France, and both came in at, well, Germany came at 42.4 and France came at 43.9. So both fucking appalling, but slightly better than expected. Fun fact: the French factory activity has contracted in August at the fastest pace since January. So there's what that for you. But anyway, as you said, it's been a bit of a long one today, and so we will give everyone a break. Like we said at the start of the show, is Labor Day, so thin and wispy markets like Michael's Barnet. If you don't have to trade,
Just don't trade.
don't trade.
Just
If you don't have to trade,
take the day
don't
off.
trade. But if you do have to trade, keep it tight. We love you lots, and we will see you tomorrow. Bye.
See
See
you
you. Bye
later.
bye.
Bye bye.